Making the right investment decision, it is not easy. And while there's no one-size-fits-all playbook for investing, making smart investment decisions can help you get one step closer to achieving your financial goals. Now, every once in a while, investors will make poor decisions and fall into some investment traps that could cost you thousands of dollars. To break down what investment traps you need to avoid, I'm joined by George Kamel, who is the host of the George Kamel YouTube channel, co-host of The Ramsey Show, and the author of Breaking Free from Broke, the ultimate guide to more money and less stress. There you see the cover of his book. George, thanks for taking the time here today. What is the number one trick that people can start to employ right now in order to avoid some of the investing pitfalls or traps that are out there?
Well, I always say, if you follow the trends, you'll fall for the traps. And unfortunately, a lot of young people out there, they're kind of spooked by the stock market and what their parents did, and so they're turning to things like NFT and crypto. And even worse, permanent life insurance has made a wild comeback. If you look on Instagram, you see the words tax-free wealth strategist. That's a sign you're about to get scammed. So if you can just instead be the crockpot in a world full of microwaves and have that long-term mindset and stop timing the market, don't jump in and jump out, just enjoy the ride. And if you see this show, you'll see a lot of green, you'll see a lot of red. It can stress you out. So you got to just be calm and look for the long term.
Okay, so let's walk through some of them, because sure, if I was interested in, fuzzy penguins, then, maybe I would have bought into a lot of NFTs or tokens out there. But at the same time, I would have been needing to be ready to incur risk, more outsized risk than some other asset classes or areas of the market. I bring up NFTs, of course, because it's tied into some of the riskier or trendy, as you mentioned, at the time, parts of the financial and investment conversation. So of crypto, NFTs, permanent life insurance, which one has really taken the cake from your own purview?
Well, the one that's sort of the sexiest right now, of course, is crypto. With Bitcoin shooting up in value, everyone's going, see, we were right, we should all be in crypto. And the problem is, young people are avoiding tax-advantaged retirement accounts like IRAs and 401ks, and instead hedging all of their bets on crypto. And that worries me, because we also get calls on the Ramsey Show where people go, I put all my money into this coin because my buddy told me it was going to be the next one to take off, and now I lost all my money. You have to remember, this is some virtual roulette you're playing. This is still gambling, and I'm not anti-crypto, but you got to be doing the right things first. You got to get out of debt. You got to have the emergency fund. You must be investing into those tried and true investment assets like your 401k, the IRAs, index funds, mutual funds. That's what's proven to be successful over time.
George, it's interesting, and we showed your book earlier here. You talk about the three stooges of wealth building. How did you come down to this, and what are they?
Well, as I've taken calls on the Ramsey Show and talked to so many people, I found that it really boils down to three things. It's greed, fear, and pride. Those are the three stooges of wealth building. And greed is that intense, selfish desire to build wealth really quickly. That's the get-rich-quick that can throw people off, because you don't make good decisions when greed is at the forefront. Next is the fear. A lot of people have FOMO. What if I miss out on this investment and the timing in the market and this crypto? And instead, you should have JOMO, the joy of missing out, knowing that you're doing the right things. You're building wealth with confidence and peace. And lastly, you've got pride. And this is the thing that says, I'm better, I'm smarter, I know exactly what stock to invest in, and that's when people lose their butts. So instead, you got to have humility. And so if you can have that generosity thing to fight against that greed, you can have the JOMO to fight against that FOMO, and then you have the humility to fight against the pride. I found that is the most peaceful way to build wealth.
Additionally here, George, a lot of people are looking to build wealth so that they can retire either early or retire on time with, less considerations or less concern here. When you think about retirement accounts and how people can make sure that they are avoiding traps but setting themselves up adequately for retirement, I wonder, where you immediately point to there in some of the investing recommendations or guiding tips or guiding North Stars, however you want to look at it, that you're putting out there.
Absolutely. Well, Dave Ramsey and I are actually going to be breaking this down in a virtual event called Investing Essentials on May 21st and 22nd. So I encourage all of your viewers to join us for that, ramseysolutions.com/investing essentials. But the real foundation here is you got to get out of debt. Most people can't invest 10 or 15% because they have payments. And so once you become debt free, on average in 2 years, our followers for the baby steps get out of debt. Then you get the emergency fund in place, because when you invest with no cushion for life, you're going to run into some problems when you have to put that next emergency on the credit card instead of investing in your future. And then finally, once you're out of debt with the emergency fund, invest 15% into those tax advantage retirement accounts first, like your 401k through an employer or your IRA outside of an employer. Roth is going to be awesome because you'll build that wealth tax-free with using after-tax money. So that's the simplest version, and mutual funds and index funds are great places to put that money, not in your single stocks or your crypto coins.
And then just lastly, George, while we have you here, I mean, we've been looking at study upon study of what millionaires are doing successfully around this to plan for retirement, where it's perhaps a little bit easier, at least from their estimation and their own financial planning. But what are the millionaire type of tips, or at least the tendencies of millionaires, that the layperson like us can make sure that we're also tapping into to set ourselves up?
Absolutely. This is something we covered in our national study of millionaires. We studied over 10,000. Turns out 8 out of 10 said that employer retirement plan was the key vehicle to becoming a net worth millionaire. And on top of that, millionaires, unlike what you imagine on TV, they drive used, reasonable cars. They drive the Honda Civics, the Toyota Camry. It's 4 years old. They live on less than they make. They don't have bajillion-dollar homes. They simply follow these tried and true steps, and they don't fall for these trends. They're not trying to live a flashy lifestyle, and yet these are the millionaires that are pulling up to the next at the stoplight in the Toyota Camry, not in a Lamborghini. So we have to reset our expectation and see ourselves as future millionaires, and that's what it took for me to get there.
All right, George Kamel, who is the host of the George Kamel YouTube channel and co-host of the Ramsey Show. George, thanks so much for taking the time here today to kick off the show.